Welcome back. Are you among those who have seen a jump in what you're paying for insurance? Insurify, a group that tracks rates for auto insurance, reports that in Connecticut, the average rate is expected to rise 34% in 2024. Here with some insight into why rates are up is attorney Eric George. He's president of the Insurance Association of Connecticut. Welcome.
Thank you for having me, Eric.
So this is one of those things. It's like taxes and everything else. People get that bill and they go, oh. Am I wrong? Does it feel things are seeming more expensive? Do you agree?
They absolutely are. And you go to the grocery store, you're paying more for your groceries. You got your electric bill, you're seeing your electricity rates go up. We're seeing it across the board in so many necessary items that we pay for. And you're seeing it in auto and home insurance as well. So we have sort of a confluence of reasons that are really creating this situation. First and foremost is inflation. Now, we've had some very good news as recently as today. Wall Street Journal said that the most recent CPI index increase is the lowest in 3 years. And that's for both core and general inflation. Now, that should have a downward effect going forward, but as of right now, that's not going to give you any solace. So inflation is a huge cause, and there are other factors as well.
Well, let's go through the two. We
Sure.
talked about homeowners and autos. Let's start with homeowners.
Sure.
And we talked about it before we began. I mean, certainly in places like Florida, you're going to be hit worse. California, I saw Florida average cost 11 grand a year for a customer down there. But nonetheless, just like you said, people don't care what other people's misery is. People see their bills are going up.
Right.
So what are the causes for homeowners rates increasing in Connecticut?
So starting off with inflation, that is number one. Another big factor is litigation. What we've seen is a rather sizable increase in the average bodily injury claim over the last 10 years. It's gone up 80% since 2014. That's a very high number. We also have other supply chain issues. The cost to build a home is more expensive. The cost to repair a home is more expensive as well. And then we cannot ignore the increased frequency of severe weather events. It's been happening everywhere. Connecticut is not immune to it. Now, Connecticut does have the benefit of having a nice little barrier reef island called Long Island. And it does save us from the brunt of certain storms that other parts of the East Coast do not get to benefit from. But those are the main factors in home. And then,
well, before you get to that, I saw a net underwriting loss in 2023 of $21 billion. So the whole industry is kind of based on predicting what claims are likely to come in and then setting rates based on that. So is it that everything's just escalated faster than expected?
Yes. What insurance covers and what insurance pays for, all of those things are going up in price. Now, this should be solace for a lot of viewers of yours. Insurance is a very unique industry in that we are more regulated than almost any industry in the world. We have a state-based form of regulation, and our rates, our premiums, have to be approved by the Department of Insurance. And they look at it not only to make sure that they're not grossly inflated, but also that they're sufficient. Because with insurance, you need to have enough capital to pay your promised claims. And if an insurer, let's say a less than reputable insurer wanted to undercut the market, they're going to go into a death spiral. And it's the insurance department's obligation to make sure that they aren't going to do something. You need to charge enough for you to pay those claims. So while you don't necessarily have that same protective overlay in other commodities and other things you buy, you do have that with insurance.
Well, and listen, nobody wants to pay more money, but when you make a claim, you certainly hope the money's there to pay it out. So on the back end, you want that money to be there. Absolutely. Let's talk about cars. I saw Market Watch said Connecticut was the #2 most expensive state for auto policies. What attributes to increases people might be seeing on their auto bill?
So the first two are still in place, inflation and litigation. But now with automobiles, we have a few other factors as well. We have a lot more technology going into cars. So that increases the cost to build them, and it increases the cost to repair them. Both parts and labor costs have gone up. We also have, and you've probably seen this on your commute to work, I know I have, poor driving behavior. That seems to only be getting worse rather than getting better. What we have noticed was after, or in the beginning parts of the pandemic, when many people were not traveling to their place of business, you had fewer people on the highways. Those who were on the highways were driving faster, not necessarily turning on their indicator as often. So their behavior was beginning to degrade. Then, as those stay-at-home orders went away and people went back onto the highways, the behavior didn't improve. So we have seen not only an increase in accident frequency, but also severity.
And obviously, again, that would result in claims paid out, and you have to have enough money coming in to pay those claims out.
Absolutely. And that goes to the point where we need to have the sufficient amount of capital to pay the promised claims.
So we have about a minute left. Tell me what people can expect in the future. You talked about that, the good news on inflation over the past week, but what can we expect as we go to renew next time the cycle comes around?
So CPI should have a positive impact, and hopefully the supply chain and the cost of products begins to moderate. But I want to talk about what people can also do. So talk to your agent. Hopefully you have an agent, but if you don't, get an agent. Shop around. I can't stress that enough. We have a competitive marketplace in Connecticut. Shop around. Consider bundling. Consider a higher deductible. A higher deductible will reduce your premiums.
And while it may hurt a little bit if a claim ever comes in, as long as if you can avoid those claims, it will pay off.
That is absolutely correct, Eric.
And is there anything we can do to predict it, or there's so many factors involved that you just have to wait and see what's going to come?
It's sort of like chaos theory. Where is the droplet of water going to go off your hand when you put it on? You have no idea.
All right. Well, we appreciate all the insight. Certainly, it's something that those bills are going to keep coming to our viewers, every 6 months or every year when that renewal comes around. Eric George, we really appreciate you being with us. We hope you'll come back.
Thank you very much.